me, Susie. Chase me.
Good.
Quote, I'm not against increasing my financial position in the current conditions. I think that if we look at the alternatives, for example, at the available markets and then consider what is happening in the world, I find cash to be quite attractive. Welcome to Crypto Bull. Today I'll talk about how Warren Buffett hints that the market expects a crash in just 12 months, and then I will share my opinion why this is good for Bitcoin. Buffett has accumulated $188 billion in cash in short-term treasury bills with a rate of 5.4%, which is 13% more than at the beginning of the year. However, Buffett said, it is fair to assume that by the end of this quarter we will have accumulated about $200 billion in cash. That is even more cash. And where does this cash come from? Obviously from sales. Warren Buffett is selling part of his Apple shares. Before the start of the first quarter of 2024, Apple was the largest position in his portfolio, totaling in 50% of his investments. But he just sold 116 million shares of Apple, reducing his position in Apple by 13%. Usually in such cases the CEO of any company explains the sale of shares with tax reasons, and Buffett is no exception. Question. Have your views or the views of your investment managers on Apple changed since you first invested in Apple in 2016? Well, yes, we sold shares, but at the end of the year I think Apple will still be our largest position. We consider stocks as a business. When we own shares of Coca-Cola, American Express or Apple, we look at it as a business. We don't have the ability to predict the market, and we don't try to. If Buffett sells his Apple shares and it is not because of changes in market or external conditions, but because of changes in business, does he imply by that the sale of 20 billion worth of Apple shares is due to some problems with the company? As in this case that would be a logical conclusion, as selling 20 billion worth of shares is madness, and that's what Buffett himself says, hinting at several reasons for the sale. We own Apple, which is even more profitable business, and we will own Apple until something truly extraordinary happens. We will own Apple, American Express and Coca-Cola, but I am not against increasing my financial position in the current conditions. I think that if we look at the alternatives, for example at the available markets, and then consider what is happening in the world, I find cash to be quite attractive. Yes, we didn't mishear. Warren Buffett just said that he is not against moving out of the market into the cash at the moment. Given everything that is happening in the world, he wants even more cash, not assets. Berkshire noted that they have accumulated $188 billion for the first quarter of 2023. In February they had $167.1 billion. But $188 billion, this is literally market capitalization of General Motors, FedEx and Starbucks combined, and if you think of it, it's just madness. There have been many assumptions that Buffett indirectly hinted that he doesn't think that market will hold up as well in 12 months. Of course, Buffett will never confirm this directly, but judging by what he said earlier, it certainly makes sense. He said he did so because he wouldn't mind replenishing his cash reserves at the moment due to the situation in the world. I think he meant the economic situation. Later I asked him why he needs so much cash, where he invests it. Buffett replied that there are currently no good assets to invest in. It seems that he thinks that the entire market is overvalued. So I can name 3 reasons why Warren Buffett is doing this, but this is just my opinion. First, it is profit-taking to avoid future capital gains tax, as Biden announced that it would be 44.6%. The second reason is to keep as much cash as possible for major insurance losses for more frequent and severe weather events. And third, the fact that Buffett actually doesn't mind having cash. He is not afraid to sit in cash in such conditions, especially with treasury bond yields around 5.5%. Most likely in the event of stock market crash due to a recession, he will buy whatever he wants. In the past, Buffett has talked about increasing extreme weather events and the need for Berkshire insurance business to have a large sum of cash on hand to always protect Berkshire from, say, complete destruction of companies' commercial real estate. So yes, he has accumulated 188 billion, but in reality he doesn't have that much cash for investment. In the past he said that a very large portion of his money should remain untouched and reserved for insurance losses. Nevertheless, he can still use tens of billions of dollars from this amount to buy market dips. But what is Buffett waiting for, and why he isn't investing now, instead choosing treasury bonds yielding around 5.5%? Warren Buffett knows that a recession is already inevitable and loves to buy when there's a trouble in the market. That's why Berkshire Hathaway, owned by Buffett, accumulated a record 168 billion in cash. True, this was in March of 2024, and now this amount is already at 188 billion. Now everyone is looking at this infographic and is very afraid, as it shows that Buffett starts accumulating a lot of cash a year before market crashes. He accumulated a huge amount of money here a year before a dot-com crash, then year before the 2008 crisis, and then a year before a coronavirus crash in 2020. And finally in 2024 he accumulated a record amount of cash. Naturally everyone expects a crash in 12 months, as it was happening before. Buffett explains it by market conditions and the lack of assets to buy. In fact, he acts wisely, leaving himself the opportunity to buy the biggest market dips in history, which are also historical buying opportunities. But here's what few people pay attention to. Every time after these collapses we saw interventions by central banks which urgently activated quantitative easing policies, and with each cycle such interventions became more extensive. The most extensive financial stimulus was in 2020. It was more extensive than anything we have seen before. And guess what? The next stimulus will be even more extensive than in 2020. Possible financial stimulus to the economy in the future could be 15 or even 230% larger than in 2020. And most likely Buffett knows about this too. He knows about impending crash and the newly activating printing press, which inflates the dollar supply every time. Only in 2020 they printed 22% of all existing dollars. What did it lead to? It led to an increasing in Bitcoin by 11.9%. Bitcoin is very simple. The total supply of money printed by central banks divided by the total supply of Bitcoins, which is always fixed at 21 million coins. Here is the formula. Bitcoin explodes thanks to a freshly printed dollars injected into a global market. This works with any fiat. Look at what happened to Bitcoin this year against Turkish lira. It is the result of printing press, and it is also the result of the same formula. The total amount of printed Turkish lira compared to the total amount of Bitcoins equals the rise of the price of Bitcoin in lira. Compare Bitcoin against the dollar at the top and against Turkish lira at the bottom. We see that Bitcoin pair against the dollar is clearly lagging. So Bitcoin against the lira has already grown by 50% from the previous historical peak in 2021, but against the dollar Bitcoin is still hovering around this peak. If it grows by 50% above this peak, its price will be $999,000. That's it from me today. If you found this video useful, subscribe to Crypto Bull channel, leave a like, share this video, and see you in the next one.